The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you. This is Lunch Money.
Welcome to Lunch Money. I'm Kate Williams. If you have a question about what's happening on the market today, you can give us a call. Our phone lines are open right now on 1300 30 34 35, or you can email us at yourmoney@skynews.com.au. I'm afraid we're back in negative territory today. The S&P ASX 200 down by 1.5%, wiping out those gains we saw yesterday. 67-point loss for the major indexes. You can see on your screen right there. We are now trading at our lowest point since mid-2013. We did see the Australian dollar strengthen initially on that employment report out just half an hour ago. It then weakened again. You can see we're sitting at 69.3 against the greenback at the moment. We saw 1,000 jobs lost and the unemployment rate remained steady at 5.8%, which was better than consensus. All right, we do have Chris Conway from Australian Stock Report up here on the desk with us. Thanks very much for your time today, Chris. Really do appreciate it.
Thanks, Kate.
What have you made of the market so far this year? It's been a pretty ugly start to 2016, hasn't it?
Yeah, it certainly has. It comes on the back of course, the contrived rally, or I believe to be contrived rally we saw in the last 2 weeks of last year in December. That rally seemed a little bit forced. Maybe it was some big fund managers trying to pad their numbers into their December 31 read. And we've given back all those gains and a little bit more so far early this year. But 2016 is obviously a follow-on from 2015. There's some global macro worries that remain persistent. And I think the big buzzword at the moment is uncertainty. Whenever markets or whenever market participants and indeed analysts and investors are uncertain, they hit the sell button first. That's what we're seeing now. And it's pretty ugly out there, to be perfectly honest.
Yeah, it sure is, and we're getting some pretty bearish calls as well. Let's head over to Nathan Summersundaram now from Ballieu Holst. He's joining us live in Sydney. Nathan, thanks so much for your time. Really do appreciate it. Every time you open the papers at the moment, you see a bearish call coming out from one of the big banks, don't you?
Oh yeah, I mean it's what you expect. I remember only a short time ago when currency was forecasted to be $1.10 and we were looking at over 6,000, and now we're looking at currency at 50 cents and forecast at below 5,000. So,
do you think that's common that they overshoot? Everyone's talking about Goldman Sachs at the moment forecasting oil at $20. They were one of the first to make that call. But 5 years ago or so, we had Goldman Sachs forecasting oil at $200 a barrel. So do you think that sometimes they're after headlines, or what's the motivation behind these kind of drastic calls?
Yeah, look, they play the trend. If it's falling, you go to the lowest number in the market. So, you know, if you don't come right, it doesn't matter. Nobody remembers. But if you come right, you can claim that you called it first.
Right.
But look, it doesn't really make any difference. At the moment, you look at, if you look at oil price, for example, fundamentally, no one really has a clue where it's going. So, it comes down to the suppliers, and if Saudis want to take it down to $10, it'll be $10.
Yeah, what do you think, Chris? Your thoughts on the oil price at the moment? I know this is next to impossible to predict. You don't know what's going to happen in terms of the supply curve. That's got to be one of the big shocks in this whole saga, or in all this volatility, is that suppliers were able to hold on for so long as the price continued to plummet.
Yeah, look, there certainly is no predicting exactly where the bottom will be. I agree with that sentiment. And the problem with the oil market is it's like turning the Titanic. It takes a long time for those supply and demand forces to come back into equilibrium. Everyone wants to see a bottom in oil prices sooner rather than later, and that's completely understandable. But the reality is it takes 18 to 24 months probably before those marginal producers make the decision to shut down production or indeed go to the wall, and that supply-demand equation comes back into balance. So, whilst we're all hoping for a rebound, or at least oil prices to catch a bottom, I don't see that necessarily happening anytime soon, and even along the bottom it's going to be very volatile.
Fair enough. The viewers at home might see that note at the bottom of the screen right there. We are waiting to take you live to that Dick Smith creditors meeting. That'll be underway in Sydney shortly. We'll take you there. You can see live pictures right now as we wait to hear from the administrator from McGrath-Nicol. We'll see Joe Hayes speaking very shortly. In the meantime, though, we might throw the phone number up on the bottom of your screen, which is the one you can call if you'd like to ask a question. It is 1300 30 34 35 if you'd like to call and ask Chris and Nathan a question. Alternatively, you can email us at yourmoney@skynews.com.au. Let's take a look at what Nathan has been watching on the market before we get to our first question. You've had your eye on gold, Nathan?
Yeah, look, we've been looking at gold since the US Fed move because generally the market does price in too much negative news into the move, and it's a move that we've been waiting for a number of years. So gold got sold down into it, and since then gold has actually had a pretty good run. But I think on top of that, the Aussie gold miners have a free kick with the currency falling. So on Aussie dollar terms, the spot gold looks pretty interesting at this point, and anytime there is sell-off in the market, that's the safety play. And also, if you look at the trend of recent Aussie miners like Saracens and Northern Star, the market updates have been pretty positive. So going into the reporting season, that's a sector we think will have pretty positive news.
All right, thanks, Nathan. Can you give us a couple of picks for those people at home who want to get in on this?
Look, I think Northern Star had a pretty good result today. I think that's got a decent step up to go. The big caps, or relatively big caps, tend to be Newcrest and Evolution. So if institutional investors want to jump in, that's the two stocks tend to be the ones that run up. So I think as market looks volatile, those two stocks will go up.
Okay, great. Thanks, Nathan. What do you think, Chris? Do you like the gold space at the moment?
Yeah, we certainly do like the gold space. Regis Resources is the stock that our trading clients are currently involved in on the back of one of our recommendations. Okay. Not too long ago, agree with Nathan in terms of gold benefiting from the Federal Reserve moves. Northern Star production update this morning. I think SBM, St Barbara Mines, is another one that had a strong recent production update. So yeah, there's certainly some stocks in that sector that are looking very appealing and can continue higher.
Okay, all right, thanks, Chris. And then, Nathan, the media sector is the other one you have your eye on. We have our eyes on it as well because there is potentially regulatory change coming our way. At the beginning, or the end of last year, people were saying this is a possibility. It now seems a near certainty, doesn't it?
Look, the closer you get to the election, the sooner the government would want to get this through. And hopefully get some, how do I put it, friendly coverage. So there's been always an argument between the big moguls on how this should be done. So the details, the devil's in the details, so we'll have to wait and see. But look, you got to look at the regional players, and they tend to be the prey in this. So the big boys will look at the smaller players. So I'd say APN Media, Prime Media, Southern Cross are the ones that everyone will look at. My preference is APN Media. They do have a really good radio assets. And if you look at the bigger players, Fairfax, Nine Entertainment, and Fox/News Corp/10 Network, they'll be looking at it as well. And don't be surprised if one of the big boys try and do some kind of merger as well.
Okay. Are your thoughts, Chris, on the media space? Have you been taking a look at any of the stocks recently?
It's not a sector that I cover in any great detail. Again, I would agree with Nathan, though, in terms of the big players trying to gobble up the smaller players. So those smaller players, if you're holding them, there might be an opportunity that they get a takeover bid, and you'd expect a 20 or 30% premium.
Okay, all right, thank you. Nathan, back to you now. I want to get your take on Dick Smith. We are waiting to hear from administrators a little bit later on. There is a meeting underway in Sydney at the moment where Dick Smith, or at least the administrators, will need to front customers and whatnot. We do have a reporter there. We've been asked to turn the camera off, as have the rest of the media, so we won't be able to, unfortunately, take the viewers there live. However, we'll bring you live reports following that meeting and bring you across exactly what was said. But Nathan, what do you think the chances are that investors in Dick Smith are going to get some of their money back?
Oh, I'd be very surprised. I think there's a lot of debtors in play, and those things have to be cleaned out, and I think there'll be a few more skeletons coming out of the closet before this is over.
Okay, all right, thanks, Nathan. We've got a caller on the line now. We've got YE calling. What's your question today, YE?
So just basically asking, what do you think of A2M, A2MUC, whether it's heading north or south, or...
Thank you, YE. Everyone's favourite stock at the moment. There is not a lunch money that we don't get a call in about A2 milk. Chris, that's because we've seen such an incredible rise in the price, I assume.
Yeah, look, most definitely. Similar to Bellamy's that I think has risen around 600% in the last 12 months. Very exciting space. We know about the demand out of China. It had a meteoric rise, this is A2 milk, up to $2.40 and has pulled back recently into $1.50. I like the pullback. I think it presents another buying opportunity. If you are going to play in this space though, be prepared for some volatility. That's the only caveat. But if you're willing to take on that volatility, the upside, as we've seen with something like Bellamy's and even now Blackmore's introducing their infant formula into the market as well, the upside can be meteoric. So worth taking the risk, I believe, but just be prepared for a bumpy ride and don't sell out if it does pull back.
Nathan, I saw a smile on your face as well. You've answered this one a couple of times before. Questions about A2. No doubt you get clients calling in all the time as well. Yeah,
just a few times every hour probably. But look, I agree. There is a fair amount of volatility in this stock. Look, they've had a really good run. I think Bellamy's run from an IPO of $1, it went up to about 15 something, so it went 15 times. So it's scary how the market moves. Look, I tend to think there is going to be risk in it because I think the easy run's already run. Now you've got to get I suppose the numbers have to come through in the reporting season, so there is a bit of risk. I tend to go with the proven winners at the moment. That's still Bellamy's and Blackmore's. I think Blackmore's has pulled back to, I think, just short of $200. I think Blackmore's in the next 6 to 12 months will hit $250. It's got a pretty good business. This is a kicker on top. So I expect Blackmore's to go higher. Bellamy's, really good margin. Sales looks pretty good. And I think they'll get an upgrade through this reporting season. And I think they'll go back to $15.
Okay, all right. Thanks, Nathan. This is a program, of course, where you can call in and ask a question. That's what YE did. That number on the bottom of your screen right now, 1300 30 34 35. Give us a call and we'll try and answer your question for you. We do have a caller that's come from New South Wales right now. Harry, what is your question today?
Yes, hello. I would like to know about the future of Slater and Gordon, please. Because
okay.
I bought at $3, so now I'm losing money. Will it go 50 cents or will it go bankrupt, or should I be selling now?
Harry, we had a little trouble hearing you there, but I do believe you were asking about Slater and Gordon, and I do think you might have already bought into it. Hopefully that wasn't too long ago. It's lost about 90% of its value over the past 12 months. Chris Conway, your thoughts on this one, the beleaguered Slater and Gordon?
Yeah, Kate, I have a lot of trouble with holding this one or recommending to clients that they even consider looking at it. They've really made a mess of a whole lot of things. Obviously, the Quindale acquisition has turned out to be poor. They came out at one stage and reinforced some numbers, only to 3 weeks later say that those numbers wouldn't be met. We'll get a very clear read of what's happening with Slater and Gordon coming into reporting season. So look, if you are holding now, it's fallen that much, it's probably not worth selling out now. You're better off waiting for reporting season and seeing if they can put up some numbers that the market finds palatable. If you're not holding it, don't go anywhere near it. There's too much regulatory risk and there's too much business risk, and there's also the risk that Slater and Gordon's finances are going to pull their funding. So stay away from it if you don't own it. If you do own it, might as well hold it into reporting season.
All right, Nathan, your thoughts on this one? We know they're facing a potential class action, questions around transparency and also accounting standards. What do you think of Slater and Gordon? There are suggestions that its Australian assets are worth around $5. It's trading under $1.
Yeah, it tells you there's something seriously wrong. The market, as they say, value is in the eye of the beholder, and the market doesn't seem to see value here. Look, there is a lot of risk, as Chris said. Look, if you're an investor looking to go into this stock, I'd say stay away. You look at where the market is, there's plenty of much better quality assets with much less risks out there. So there's better options. But if you are holding, as Chris said, you're better off running through the result and hope that the market actually likes the numbers that comes out for a change.
Yeah, okay. We are going to go to a quick break, so we'll say thank you to Nathan Somersundaram from Baillieu Holst. Nathan, thanks for joining us on the program as always. Really appreciate your time.
Not a problem.
And Chris Conway from Australian Stock Report is going to stick with us. We'll still be answering your questions when we come back on 1300 30 34 35. We'll also bring you the yuan fix, which is due in about a minute's time. We'll see what China does with its currency today, and then the Shanghai Open at 12:30 Australian Eastern Daylight Time. We'll be back in just a moment. Welcome back to Lunch Money. If you have a question, you can give us a call. Our phone lines are open right now on 1300 30 34 35. Let's bring you across that breaking news on the bottom of your screen. We have seen China set its yuan reference rate. It's relatively unchanged at 6.5616 against the US dollar. Perhaps more importantly, though, they have injected some more liquidity into the market as well. $160 billion via a 7-day reverse repo. That's the PBOC injecting more money in there, as well as fixing the yuan relatively unchanged. We're going to go to our guest host, Chris Conway, now joining me up here on the desk. And Chris, it seems to have spooked markets because we saw quite sharp falls following this news. We've seen SPY in the US really plummet. The Australian market also coming off, the dollar falling, risk assets everywhere seem to have taken this news badly. Do you think it was the news of the stimulus? Are they worried that China needs to do this?
Yeah, you've hit the nail right on the head. The fact that they need to continue propping up the yuan, we know about the fact that they've been propping up the offshore yuan. So, yeah, the fact that they need to keep pumping liquidity means that they don't quite yet have a handle on the volatility and they don't quite have a control on it. So it's another signal that perhaps more is required. Interestingly, just having a look down, breakdown, sorry, of a 10-minute chart, there was a bit of a sell-off into or prior to the yuan fix at 12.15, and then, as Kate said, a further sell-off afterwards as well. So it looks like some people were actually positioning ahead of the numbers too.
Okay, all right, interesting. Yeah, that yuan fix has certainly proved to be a volatile point for our local market here in Australia. Does it change the way you buy stocks during the day now that we see all this volatility between 12 and 1 o'clock on the Australian time zone? Yeah,
most definitely. It's sort of broken the session down into two smaller sessions, you know, positioning prior and having beliefs about what the yuan fix will be, and then of course the Chinese market open at 12:30, and then reacting to the news post those two events at 12:15 and 12:30. So it's a very multifaceted market that we're living in and working in at the moment, and it certainly impacts the decisions that people are making. You know, people having to cover positions if these drops don't turn out the way that everyone thinks that they will, or the people that took the positions think that they will.
And it kind of seems like it's breaking down by consequence the correlation with the US a little bit as well.
Yeah, well, there's so many factors in play at the moment. Obviously, we've got US reporting season coming up where earnings growth is expected to be negative for the third consecutive reporting season. We've got oil prices which are nosediving and weighing on global sentiment, and throw in there China as well. So, you know, it's we're juggling balls at the moment, and it's very likely that one's going to hit the ground, you know, that they do every day.
So just to reiterate for everyone at home, we have seen the yuan fix, it's fairly steady, but what really has set markets in motion is news that the PBOC, the central bank over in China, is injecting $160 billion of yuan with 7-day reverse repos. That is what we are hearing. As a consequence, we are seeing Japanese stocks plunge. We are seeing Chinese bond yields hit record lows. All of this on this liquidity push from the PBOC. It's certainly the news of the hour and is now dictating trade here at home. We have seen the Australian market tumble about down to around 2% at the lows. It's now sitting down by 1.8%. The Aussie dollar at 69.28 against the greenback. All right, let's take a caller. This is Lunch Money, which means you can phone in and ask a question on 1300 30 34 35. Nick from the Gold Coast, what's your question today?
Hi guys, I love your show. I'd like to know your
Nick,
comment.
have you got us there? Nick from the Gold Coast.
Yes. Hi.
Sorry.
Can you hear me?
Yes, we've got you. Sorry, Nick.
Hi. Thanks for taking my call. I just need to know regarding RCR, Tomlinson, and Thorn Group, please. Your comment and your technicals, if you can give me on that, please.
All right. Thanks for the question, Nick. RCR Tomlinson, not a stock I'm familiar with. Are you?
Not greatly, but I do have the chart here in front of me, Nick, so I can talk to the technicals as you've asked about. So topped out at $2.60 recently, which was a swing high from February this year, and has taken a turn south. It's sort of in the midpoint of the range at the moment. The bottom side of that range sits at $1.60, and on the chart that I'm looking here now with about 12 months worth of data on it, that point has been tested and respected 3 times, and fairly specifically at the $1.60 level as well. So I would suggest very strongly that that is your risk point. You know, the stock is selling off in line with the broader market sell-off, so it's not necessarily underperforming the broader market. But in terms of continuing to hold this stock further out, I would suggest that if it cracks 160, well, then sentiment has shifted in this stock, because all those people that were willing to buy it at 160 previously are no longer willing to do so, and that's when you can see one of those really, really nasty and ugly technical breaks lower. So risk point for this one at 160, strongly suggest that if it gets down there and breaks through, you probably bail on this one.
All right, thanks very much, Chris. Appreciate that. We've got another caller on the line. Glenn from Newcastle, what's your question today?
My question's on Channel 10. Is that I wake up today and make a fortune, or has there been a consolidation in the shares? And I couldn't get into the computer with the TN code, so I'm not sure if they still call it Channel 10 anymore. Maybe they call it Channel -10.
They still call it Channel 10, I can tell you that much, Glenn. Thanks for the call. We might bring a chart up to take a look at its yearly performance to date, as Chris has the technical perspective for us.
Yeah, so unfortunately I don't know a lot about the story this morning, or it seems that they're trading under a different code at the moment, TENDA. But technically this chart and this stock... TENDA I've got as 10 Network Holdings coming up on my system. Technically this stock is shot though. We know about the purchase or the investment from Foxtel, I think it was, or News Corp, buying 10% of their shares. So there's some support there. There is the potential that it turns around fundamentally, but purely from a technical perspective, this is one that you wouldn't want to hold. Again, if you are holding it, you've probably lost a fair percentage of your holding. And again, coming into reporting season, you might as well hold and see if they can put up some numbers that the market respects.
Yeah, fair enough. Okay, thanks very much, Chris. We are going to take a quick break. Just to recap what we've seen over the past half hour, the yuan fix fairly steady, but a liquidity push coming from the PBOC has seen markets continue to tumble today. Looks like the Hang Seng, I'll just tell you now, is going to fall 350 points at the open. Futures are pointing down by 15%. We've got the Shanghai Composite trading down by 2.5%, or 75 points at the moment. So some heavy regional falls today on the back of that liquidity push from Beijing. Of course, concerns really that China needs to bolster its financial markets, infiltrating share market psychology today. All right, we've got to take a quick break. We'll be back in just a moment with more market moves. Welcome back to Lunch Money. I'm Kate Williams. It is 12:30 in Sydney and noon in Adelaide. We do have the S&P ASX 200 trading down by 1.7% at the moment at 4,901. We are seeing a vicious and pretty broad-based sell-off today. That started early on, but it has been exacerbated by a liquidity push from Beijing that we saw announced around 15 minutes or so ago. We have seen the Shanghai Composite, or we are seeing it open up now. It is poised to re-enter a bear market if futures are anything to go by, and that would be the second one this year after the Philippines. Shanghai expected to fall when stocks open in just a minute's time. This is where the Australian dollar is sitting at the moment. We did see it strengthen initially on the employment read, but it has again weakened. You can see it there at 69.35 against the greenback. All right, this is Lunch Money. We do have Chris Conway from the Australian Stock Report up here on the desk with me. We're answering your questions on 1300 30 34 35. We've got Alan calling. Alan, what is your question today?
Good morning. Thank you for taking my call.
No problem, Alan.
I did want to ask about lithium, but if that's not your area, then maybe we can move to Technology One,
Technology
TNE.
One. Okay. Thanks, Alan.
I've been involved in my own particular company is an office stationery, furniture, IT company, and we do use cloud for our clients, but Technology One has a large number of multinational companies around Australia that they're moving to cloud, so I was interested to find out what your thoughts are on Technology One.
Okay, thanks very much, Alan. A technical perspective on this one, Chris?
Yeah, I do know a little bit about the company. Correct me if I'm wrong, Alan, but I think they have, it's a payment services company, and they do payment systems, highly customisable payment systems for utility companies and governments, I believe. They have a pretty strong business proposition, a competitive advantage, and their share price has been performing exceptionally well of late. It's had a very strong run, breaking out of a range, the top side of which was $4.20 earlier in the year, pushed up to pretty much exactly $5 only a couple of weeks ago, and has pulled back in line with the broader market sell-off. I like the story, I like the technicals. If you are holding, I would suggest you continue to hold. If you're considering perhaps buying some more, if it pulls back into $4.30, and that indeed was that swing high that I was talking about previously that it reached in March and again in May. So if it pulls back to $4.30, that's a previous point in the market where you know, people were happy to buy the stock up to. You might catch some support there, be able to pick up some more, and then get a nice bounce off that level. So overall, like this one, opportunity potentially to buy some more at $4.30.
All right, thanks very much for that, Chris. We are going to go to an email in just a moment. First, just to let everyone at home know, the Shanghai Composite has opened. It has now fallen below its December high, 20% below its December high, which means it's officially in a bear market now. The Shanghai Composite falling almost 3% on the open following that injection of cash from the PBOC. So the Shanghai Composite has entered bear territory officially. Stocks down about 2.6% at the moment. All right, let's get another caller on the line, or an email we'll go to now from Anne, who says, CBA, today's prices are buy mid to long term, retirement soon. All right, so I think Anne is asking if she should buy for a mid to long term outlook. She is retiring soon. Chris, your thoughts on this one?
Look, what I would say about the banks at the moment is that they're on grossed up yields of circa 10%. History shows that when the banks are on such grossed up yields, they don't tend to stay there for very long. And what I mean by that is bargain hunters and value investors move in and bid the stocks up. From a technical perspective, CBA has come off the lows around 70. It's put in over the last 3 months a series of higher troughs. In the context of the huge sell-off that we're seeing at the moment, that doesn't mean a great deal, but I think the overarching thing, as I was talking about before, is those grossed up yields. Like I said, historically when the banks are at these levels, they don't tend to stay there for very long. So offers some value, but you might want to consider your timing in terms of buying, i.e. if the broader market continues lower, you might be able to pick up CBA a little bit cheaper.
All right, thanks very much for the answer, Chris. Appreciate that. I do believe we're going to go to another email now. We've got one that's come in from Albert, who says, can you give me your thoughts on Australian dairy farmers, please? With the China baby story and demand for Australia's baby formula, can you answer the following questions? Is it a buy? At what price? And what do you see the trading range at? Let's get a perspective on Australian dairy farmers, please. This was a backdoor listing from what I remember.
Yeah, what's the code on that one? I don't even...
Let me find out for you.
I'll speak...
AHF. AHF.
I'll speak a little bit about the space that it's operating in. As we've mentioned earlier, this is a very exciting space. There's a lot of companies doing particularly well in the milk and baby formula space. Was trading at 14 cents towards the end of last year, had a massive spike high. I'm not sure what that spike is all about. I apologise for that. Got up to 58 cents and has pulled back to about half that of 31 cents. So, look, very volatile. Obviously a lot going on. This is going to be one of those ones where announcements shift the market rather than anything technical that I could talk to you about. I guess if you believe in the long-term fundamentals and the story behind this company, then you'd be a willing buyer. That's probably the best answer I can provide. There's
probably some confusion. So it is still, you can see on our screen under APA Financial, as I said, it was a backdoor listing, so they went in under that code. All right, I do believe we're going to take a quick break, but we're going to answer more of your questions when we come back. Right now, we are seeing regional stocks being slammed following the PBOC's injection of cash in Shanghai. We've got the Shanghai Composite down by about 2.5% at the moment. We'll be back in a moment. Welcome back to Lunch Money. We are seeing further losses for the Australian share market, sitting down by 1.6% at the moment. Recovered just a little bit in the past 10 minutes, but heavy falls prior to that on the back of news out of the Asian region. All right, this is Lunch Money, so you can call us on 1300 30 34 35 and ask a question if you would like to. That number is on the bottom of your screen right now if you would like to dial in. Now, we're going to start with an email that's just come through to me from George, who said, could you please give me your view on Sydney Airport as a long-term investment? Thanks, George. All right, Chris Conway from Australian Stock Report is our guest host today. Chris, your thoughts on Sydney Airport?
George, Sydney Airport is actually a stock that I really like. I think they've got a pretty strong story. They have a monopoly. I came through Sydney Airport this morning, bought my $5 coffee and my $10 cheese and tomato sandwich. So
don't miss you, do they?
They don't. They charge pretty hefty prices. But look, they do have a monopoly on the market. It is a stock that I like. The only question that one needs to ask themselves is, has the valuation run too hard, or has the stock price, sorry, run past the valuation? With the pullback that we're seeing right now from around $6.60.
Apologies, Chris, I hate to interrupt you. We are going to have to take the viewing and ask a question on 1300 30 34 35. We do have Chris Conway from Australian Stock Report up here on the desk answering those questions for you. We've got an email that's come in from Jackie first off, and she says, I'm pretty new to the stock market. I'm looking at stocks that are ranged from $1 to $3 that have potential to grow on a 1 to 2 year period. And because I won't have the time to check my portfolio every day or month, what advice and stocks do you recommend? All right, great. Thanks very much, Jackie. Of course, the advice we provide is not tailored to you personally, but we can take a look at investment ideas generally, Chris.
Jackie, in terms of the $1 to $3 price range, my assumption is that you're looking for explosive growth stocks. Generally, explosive growth stocks are in that range, so there's no problem with looking there. I would very politely suggest don't limit yourself to that range, however. A 20% move on a $30 stock is the same as a 20% move on a $1 to $3 stock. So it's really about finding quality businesses, regardless of what their share prices are. It's looking for that positive upside growth. Being new to the market, you've entered the market during a particularly volatile period. So you are probably more cautious than the average investor or trader, and that's probably a good thing at this point in time. In terms of the stocks that I would suggest that you might be looking at over a 1 to 2 year period, look, it's a tough thing to say in the midst of a collapsing oil price and collapsing commodity prices, but there will be a bottom in commodities somewhere there. So if you're looking for explosive growth, there is the potential that a BHP today sitting at around $14.50 could be $20, $22 in a year or two's time. Once we get to the bottom of the commodity cycle and they put to bed that Samarco issue with the Brazilian mines. So if you're looking for lots of upside, oilers and miners, I know that's a bit on the nose at the moment, and there might be some watchers out there that are shaking their heads, but over a 1 to 2 year period, I think you've got good potential upside in that space.
All right, thanks very much, Chris. BHP looks like a buy to you at $14.
Yeah, well, we actually put a buy recommendation out yesterday for our trading clients. So obviously this is a much shorter time frame. But earlier on the show, Noel from Macquarie Bank was suggesting that the bottom for BHP is $12.50, and I agree with that sentiment. But the upside over the next 1 to 2 years could be $20, $22. So it's a risk-reward situation, as it always is anytime you invest in the market. There seems to be limited downside from current prices, whereas the potential upside is 2 to 3 times what you might need to risk on that position.
All right, thanks very much, Chris. We've got an email that's come in from Sam now, who says, I own South 32. Should I sell? Great timing, Sam. That is the BHP spin-off, of course, although it's lost about 60% of its value since it listed this one, Chris.
Yeah, look, if you haven't sold yet, don't sell now. Again, reinforcing what I was just talking about in terms of there at some point being a bottom to the commodity cycle. We're not there yet. We could bobble along the bottom for 18 months, but eventually the supply and demand forces that are so out of whack in oil and commodities markets right now will turn around. At the end of the day, there will be some marginal producers that will go to the wall, i.e. if you're an oil producer producing oil at $50 a barrel and only being able to sell it for 30, well, guess what? You're going to be absorbed by a bigger player, or you're going to shut your doors and your production is no longer going to be being fed into the global marketplace. So again, it's difficult. You've copped some pretty bad losses if you've been holding South 32 from the date that it listed. But if you haven't sold, don't sell now. If you're looking at buying again, if you've got a 1 to 2 year outlook, maybe even 3 year outlook, probably worth having a crack at these depressed levels because they do have some exceptional assets.
Okay, thanks very much. Chris Conway from the Australian Stock Report. Thank you for joining us on the program and answering all those questions. We do need to take a quick break, and that wraps up Lunch Money for today. As the Australian market sits down by 1.7%, we'll bring you more on what the market's doing at the moment and the reaction to the news out of Asia over the past hour in just a moment. Stay with us.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.